Up, stock compounders? Brad here. So Guy Spier recently did an interview at Brown University, a Q&A with Itai. This seems to be happening more and more at Brown. I think Pabrai did one there not long ago as well. But there aren't many people who have seen this. Okay, there's only 833 views with this Q&A that was just put out a couple of days ago. So most of what I'm going to talk about in this video is Guy Spier talking about Seritage Growth Properties. And then I'll hit on a few other things, including Guy called me out. Okay, that was a little uncomfortable to be called out from a video I've made in the past on Guy, but we'll get to that soon. So right off the bat, it's the second question Itai asks Guy about Seritage Growth Properties. And I really liked how Guy responded to that. He said, "You're inviting me to break my rule about not talking about my investments." That said, he went ahead and talked about it anyway. But he said, hopefully it won't compromise my thinking too much, okay? And I think that's kind of a ninja move right there from Guy Spier. He's acknowledging out loud that he could be feeding biases here by talking about his investments. And I think just speaking that probably helps him avoid that pitfall. So before he talked about Seritage, he talked about a company he used to own. It was an oil pipeline company. He said it was one hell of a ride because of how it was funded, okay? He bought it around 30. It went down to 2. And then he was able to sell out at 30. So he didn't lose any money, but it was a roller coaster ride. I found that a very interesting way to kind of open the dialogue about Seritage Growth Properties. He must be referencing there the debt from Berkshire Hathaway and how it's been a difficult ride, perhaps because of the terms of that debt. Obviously, there's other things that kind of came out of left field to hit Seritage. The pandemic, Amazon really capturing online market share of retail, probably faster than anyone expected, at least faster than Guy Spier expected. So on Seritage, he says, there are a number of things I have no doubt that I've gotten right in my analysis of Seritage. One of the most important things is time horizon. We need to be able to be solvent for long enough in order for the investment thesis to play out. Okay, Guy Spier, it sounds like he knew this was going to be one of these long-term holds, right? It takes a long time for Seritage to repurpose these kind of Sears shops, right? These Sears box stores into retail, mixed office, into basically an entirely new type of real estate from what it was originally. So Guy Spier knew it was going to be a long time horizon. He says, I have every confidence that my insight into the nature of Seritage's assets will play out over time. So he's still very confident in terms of the value creation moving forward at Seritage. It sounds like it's going to take a little bit longer than he was hoping it would, but he's still confident that that value is there. He says, I realize we're talking when the chairman has just resigned, okay, Eddie Lampert, and it appears he's put up the company for sale. I don't fully understand his motivations for doing that, other than he might just be tired, right? Lampert might just be tired of dealing with the Sears bankruptcy. It's also potentially a very interesting marketing strategy because they have a vast estate, right? Seritage directly owns something like 170 properties, and then they have some joint venture properties as well. They have a vast estate, and it's very hard on a retail basis to get people to look at that estate properly. By hiring an investment bank and saying potentially the whole business is up for sale, will get a lot of bright minds and people with resources to be able to put their hands, around this enormous estate and make more sense of it, right? Figure out how to unlock the most value from these real estate assets. He says the game is not yet over, okay? So it sounds like Guy Spier, still bullish on Seritage Growth Properties, admits, what I'm reading between the lines here, the structure of the debt was a bit of a challenge, has been, and it's taking longer than he would have liked to see these properties be developed. But the game is not yet over. The underlying real estate is extraordinarily valuable and will continue to get more valuable. He talks about how a lot of these locations are just in really prime spots, very close to highways. There's so much commerce that happens very close to where a lot of these Sears sites are located. I underestimated the impact of Amazon and the internet, and I certainly didn't predict the pandemic, right? So those are kind of two headwinds that Seritage is facing in this journey of unlocking value. It's extraordinarily difficult to repurpose real estate, even if it's very valuable. It's a difficult asset, but the game isn't over. So again, he's still in the game. He still believes in the long-term prospects of Seritage. It's just, it's difficult. So that's Guy Spier's kind of current take on Seritage. I just want to see when this was filmed. March 2nd. Okay, so this is about a month and a half ago. Just released a couple days ago on YouTube. Here he's kind of asked about cloning, about, how do you intelligently look at what other investors are doing, moves that they're making. So very important, Guy Spier has touched on this in several recent talks. When you look at other people's portfolio moves, you have to take into account what proportion of their net worth it involves. There's a lot of noise in these moves, okay? So it's very easy for a move to make a headline, even if it's not really a meaningful change in the overall portfolio of this investor. So that's a good reminder there from Guy Spier. Talks about commodities. I've come to the conclusion that I will never invest in commodities companies in my life. Now, after he says that, he says, well, I shouldn't ever say never. I'm open to something, an incredible opportunity coming along and changing my mind on that. But he points out mining by its nature can draw in all sorts of bad behavior. Okay, so at this stage, it sounds like Guy Spier just doesn't really have any interest in owning a commodities company. On China, he says, for me, it involves a certain amount of contradiction. Okay, if I buy shares of a tobacco company, am I killing people? No, I'm not killing people, but I'm somehow tainted by my connection to the company. And I think, that's something I believe in as well. A lot of investors seem to think they can take, maybe they can take the approach of, all right, I'm just going to optimize, whatever makes the highest returns, and I'm going to have my values and how I live my life kind of separately from each other. I'm more in the Guy Spier camp here. I don't want to own something where what they're doing just doesn't sit right with me. So I appreciate what Guy Spier had to say about that. And then back to China. China is not a free country. They imprison the Uyghur population, which is certainly a human rights violation. At the same time, they have done an extraordinary job of lifting vast numbers of people out of poverty. They're working for the common good, right? Guy Spier has this sense China is working to increase quality of life for its people to a large extent. So, it's not perfect, right? I don't think any country is perfect. But Guy Spier is well aware that there's a contradiction here. And it's one he's chosen to pursue in the case of Prosus. I think maybe Alibaba and Prosus are the two investments that Guy Spier has with large exposure to China. Oh, here it is. This is where Guy Spier kind of calls me out, not by name, but I have a sense that it's about me. He says, in a couple of videos I talked, not extensively, but I talked about cryptocurrency. I was divergent to Charlie Munger, at least on cryptocurrency. And I kind of knew it would make people go, oh my God, Guy Spier is talking about crypto, right? There's some guy who created a video that's like, Guy Spier gets into crypto, guy goes long crypto. Might have been me. So the second video here, Guy Spier bought how much Bitcoin? So you guys, this was an April Fool's video, okay? I realize that's not obvious. I should probably edit the thumbnail here just to say April Fool's, right? So not a great look for me in the eyes of Guy Spier. My face plastered right across the thumbnail. Guy says, the fact of the matter is I don't own any crypto, but that's what they heard. Just to come clean, Guy, I know that you don't own any crypto. I said it in the video at the end. Probably the most painful part of this experience for me is knowing that Guy Spier doesn't watch my entire videos, right? Even the ones that I make about him. I'm just kidding, Guy. I know you've got a lot going on managing a multi-$100 million fund, so no hard feelings. But I do apologize that this was misconstrued intentionally because it was April Fool's Day, but I get that that's easy to not appreciate by looking at the thumbnail and the title. He goes on about crypto. I don't think it's smart for somebody like me to do that too often, right? To talk about cryptocurrency, because you're kind of misleading people, okay? At the same time, I was kind of yanking people's chain, and it's better to speak in a more sincere way about what one is up to. So, I appreciated what Guy Spier was doing here talking about crypto. He's kind of pushing back against, Munger and some of these other kind of die-hard value investors that are just entirely throwing out the space of cryptocurrencies as clearly a scam, right? And I appreciate that Guy Spier wanted to take a bit of a more nuanced approach to that. Because I think when you throw out an entire, technology like crypto and blockchain as kind of nefarious, it can really limit, our learning as investors, right? To be curious, to go into new spaces and learn, expand the circle of competence. So I appreciated what he was doing. Probably took it a little bit too far with the April Fool's joke, but just wanted to come clean on that. Let's see. So he's asked, one of his approaches was, all right, if I find a great business in the US, maybe I should look for that similar business in other parts of the world, right? And he did that, I believe, with Moody's, was able to find Crystal and some other investments as well. He doesn't seem to think that's going to work nearly as well these days, just because investors have so much more access to information, right, on public companies around the world, that this kind of market inefficiency probably doesn't exist, at least nearly to the extent that it used to. He says it's probably not a useful approach anymore. What's your advice to students on making an investment checklist? Okay, I really appreciated this. look for every mistake that you've made in investing, right? In your own investing, and look for every mistake that other people have made. Try to find what was available to be seen at the time that investment was made, okay? So it's not enough to say, all right, this investment didn't work out well. Let's, fish for a bunch of mistakes. But the mistakes that could have been identified when the investment was made, those are very valuable to identify and incorporate into an investment checklist. That sounds like that's really what Guy Spier's investment checklist is composed of. Mistakes that he's made, mistakes that others have made, as a way to, go through each one of those mistakes and say, okay, I have this new investment opportunity. Am I making any of these same mistakes that I've made or other people have made before? Really to look at it through that lens of don't lose money, right? Am I clearly making some kind of obvious mistake here that's going to cause me to lose money? And it reminds me of Pabrai, how I think it was 2008 or 2009, he hired some interns to do a study. What investments did great investors lose their shirts on? Okay, and could it have been identified beforehand, warning signs that those were unlikely to work out? And I think that's a big part of Pabrai's checklist today. So, it makes a lot of sense. One that surprised me, when a CEO is going through a nasty divorce, it will be much harder for them to make rational decisions. Okay, so something to look for. Guy Spier, something that he looks for that I would never think to look for. If a CEO, all of a sudden they're getting divorced, maybe that changes the story, right? Maybe you can't count on their leadership abilities in that time when that divorce is happening. So it's an intriguing kind of outside the box thought there. A lesson for me in Seritage Growth Properties, is when you assume that change is possible, right? That was an assumption, buying into Seritage back when Guy Spier bought in. For example, repurposing retail real estate to residential and mixed office. That's fine, but what's the cost of that change, right? If the cost is 1% to 2% of the value of the assets, not a problem. If the cost is 50% of the value of the asset, or even 100%, is it a prudent investment at that point? So really kind of gut checking. All right, what is this change going to take? Going from kind of these bankrupt retail box stores into something entirely new, into something that seems like the highest value, but what is it going to take to realize that value in terms of rezoning and, everything that's involved with redeveloping commercial real estate. So to be determined with Seritage. There's far more benefit to constructing your own checklist than taking somebody else's, right? There's a lot of investor training out there where they say, here's a great investor checklist. I think there's a lot of value to building your checklist from scratch, really understanding what are the mistakes under each of these checklist items. Why are they so important to have this in the checklist? And, you really know why they're important if you put them in, right? Based on mistakes that you made or that you've directly seen other people make. And you really understand those mistakes and why they are mistakes. Let's see, maybe one last one. So Guy Spier, he'll run screens occasionally, but his idea about stock screens, finding new ideas through stock screens. We live in a world where most of the best investment ideas don't screen well, okay? And he talks about Amazon. He said Amazon would not have screened well on most metrics. There is one that it would have screened well for, and that's sales per share. Okay, sales per share growth. So looking at sales per share over time and number of shares outstanding over time. So if you see that revenue growth and you see that the company is retiring shares, buying back shares, that can be a very potent combination for a business in terms of, you know, screening for different companies. So I think that's all I've got for today, guys. Awesome job from Brown University, Itai. He's really getting some interviews with some big names. So that's got to be so much fun for a student, you know, in business school to be able to interview Guy Spier, Monish Pabrai. And so I'm very happy for him. Happy that Brown has decided to put these out for the value investing public, yours truly included. And yeah, hopefully more and more to come. And I'm going to keep putting them out because I want to keep drilling these insights into my head to make me a better investor. And I hope it helps you guys as well. So with that, I will see you all in the next one. Take care.